First it was Facebook, now it's Twitter. We are seeing how stocks can drop rapidly in a short period of time. You came here for the truth, so let me unveil that for you. Today we're going to look at what happened with Twitter. I'm going to show you what happened with Facebook, show you some other FANG stocks, and connect that in with a bunch of other issues. Let's begin by taking a look at the Twitter stock. You can see that it has moved down over 20%, 20.54 to be exact. We're sitting at about $34 as of the close. Yesterday we witnessed the Facebook stock dropping the most in history, not just for Facebook itself, but comparing that to all other stocks. That was the most significant drop in dollar terms in a single session. It was massive. Today we're seeing Twitter. Now, why is Twitter falling? I'm making the same argument I did yesterday, so I'll move through it quickly. Essentially, what we're talking about here is something that, as far as I'm concerned, is rather insignificant. We already knew this issue, and they should have priced that in already. I mean, when we talk about 1 million users that were fake, this information was already decided previous to this report. They said, look, we're making record profits. Oh, but the 1 million people are fake, therefore the stock drops such a significant amount. Now, I think this is a little bit ridiculous because of the way that I have always looked at this, and that is, what is really holding this stock up? Is it the perception? Is it based on some other criteria? PE ratios, they're off the charts. If we're looking at, how many outstanding shares there are they going to do buybacks? What is their future research and development plans? No. It's about central banks printing up money, buying up the stock, and then when they decide to dry up the liquidity, hey, it's going to happen whether you like it or not. So let me connect that in with the next one here. You can see this chart, Facebook at the very top of that. It just happened yesterday as of this recording. You could see previous to this, Intel and Microsoft both dropped significantly in the year 2000. I think that is a very important time frame to match up to what we have today. It's not as exaggerated, I would definitely say that. However, I'm looking at it very realistically, trying to be honest about it and say that we have seen things running afoul right now. When you look at this, there's only a few stocks that are really rising. In fact, I showed you before 4 stocks making up 84% of the S&P's gains throughout 2018. Now, I'd like to see revised numbers of that after today's, but what I can tell here is that this isn't the only time we've had significant drops, that's for sure. However, it needs to be understood how much money is riding on just a handful of stocks. Very big, to the perception there, what you would need to imagine how rapidly the stock market can fall in a single trading session. Yes, they can halt trading. They can definitely do that, but as soon as they open back up, you don't restore confidence by halting trading. You just prevent people from taking their money out. You prevent the bank run. Netflix, I'm looking at this stock. It had come down today in this trading session about 2%, but it's one of those with the most ridiculous PE ratios. We're looking at something that, you could point to one thing or the other within the Netflix stock. All I know is that they're burning through money and they're doing it, basically trying to say that, look, we have a lot going for us, so this is, just hang in there, we'll be fine eventually. But all I know, by looking at this, I see the numbers, I'm addressing this realistically, and what I see is we have, again, a few stocks that are really where all the concentration of wealth is. Netflix is one of them. FANG stocks, the world's most crowded trade, burns investors who held into earnings. Okay, so this is an article here that I just wanted to cover these couple points. FANG stocks are taking a rare plummeting as the tech companies report second quarter earnings results. Facebook and Netflix shares were rocked by unexpected disappointments in performance categories critical to the business. Sure, as I said before, we've seen this time and time again. It's nothing really new, but it's an excuse for the market to sell off, take their profits. Amazon is the last bastion of hope for FANG this earnings season, but is under pressure to report stellar results. So ultimately, it doesn't matter. This is not going to be the trigger for the next collapse, I don't think. We're going to need to have a real reason. Derivatives are unraveling, or something big, something major. Interest rates go too high and that just collapses everything. We're going to need a major event, and this right here will be used definitely for people to buy into the dip. I see that happening. All right, so I just wanted to ask you right now, do me a favor, hit that subscribe button. If you're watching these videos, you've probably been doing so for a while. I just wanted to say, join me here on the channel, become one of the 120,000 plus people here, and that's all for the video. Take care.